Hello everyone, I'm Kunal Sodhani from Shinhan Bank India, representing Global Trading Center, and we are here once again for another episode of understanding the macro trends and analyzing the currency pairs. So we had the Fed outcome, which in turn was expected to be status quo between 5.25% to 5.5%, and it remained the same. But the interesting part was the commentary and the Q&A sessions which happened later. So initially, once the Q&A session started, the first question was clearly asked that how do you see about the rate cut criteria? The initial answer was that they look forward for rate cuts, and that was quite dovish initially when that was stated, and dollar index went towards 100 and 290 levels. But then further exploring further questions and the replies were considered slightly more hawkish because then he clarified in one of the questions that at least they're not anticipating it or they don't have that confidence that inflation print may come lower in the month of March, which means the market started thinking hawkish and dollar index sharply bounced back towards 100 and 360 levels. So somewhere it was more hawkish tone, which was quite a surprise. And the month of March rate cut is almost eliminated at this point in time, considering the Fed chair speech and the comments and the Q&A session. We also have the Bank of England policy, which is due, where we expect it to be status quo at 5.25%. Declining retail sales have been their concern. Also, if we talk about the demand side problems, they still prevail. So we continue to hope and see that the restrictive monetary stance will continue for some more time. If we talk about India specific, the FPI flows for equities have seen an outflow in equities of around 19,000 crores a week back. And if we talk about the current data, it's around 25,000 crores of outflows. On the debt front, the inflows are around 19,000 crores. But on a net effect, around 6,500 crores of outflows have been seen for the month of January. If we talk again about the Brent crude prices, they have been hovering around $80 per barrel. Geopolitical tensions at times create that risk on risk off scenario, particularly towards the Red Sea crisis, which cannot be ignored, so which needs to be under TAD. Also, if we talk about a dollar CNH, that is Chinese yuan, it is again, consolidating, though they have their own problems with respect to real estate and the demand side problems and the slowdown which we're talking about. But still, it's not reflected in the price and does not much of an impact which is expected from that side. 10-year US Treasury yields have softened towards 3.95%, while 10-year GSEC are still, consolidating bit around maybe 7.15%. For dollar rupee specific, we continue to expect 80 to 80 to remain an immediate support zone. Overall, if we talk about not only a week, but maybe till March end, we expect some kind of appreciation bias towards the dollar rupee pair, and we expect the range play to broaden towards 80 to 20 on the lower end, while 83, 35, 40 remaining an important resistance. On the dollar index, we continue to expect 102.50 to act as a support, while 103.80 is at this point in time acting as an immediate resistance. For exporters, we would continue to say that if we are getting levels around 83, 83.30, this band, it's always crucial to have some kind of exposure and not try to eye the top. While for importers, we can wait with a stop loss of 83.30. So that's all from my side, friends. Thank you so much and wishing you all a very happy and good trading weekend as well. Thank you so much. Thanks.